questions will be looked at. And if they're not dumb, of course, they're never dumb. I'm just kidding, you guys. And we will talk about them. We'd also like to thank our sponsors. First, Independence Arc Farm in Arkansas. We always complain about big companies taking over the food supply. There is something we can do about it. Just to patronize small independent operators like Marco at Independence Arc Farm. Also, Dana Samuelson at the American Gold Exchange. I don't know if you guys have noticed this. Gold and silver are getting a lot of press lately. It's probably a good idea to own physical gold and silver. Both Bobby and I do. If you want to contact Dana Samuelson, American Gold Exchange, you can find the link on our page. Lastly, unfilteredinvestor.com. The work that Mike Arnold and Bob Iacchino do on technicals, not just for short-term trading, but for medium-term and for long-term portfolio construction is astounding. I've been involved with these guys for a couple of years. I wish I was involved with them for the last 20 years because I think I would have had a lot more money. Robert, how are you?
Good. Actually, speaking of that, you mind if I share something real quick?
Not at all.
Because this is a little bit more complex for the people who do subscribe to our newsletter, but we put out a PayPal recommendation, okay? And that PayPal recommendation was off of this double bottom here, okay?
Yep.
And it's funny because I had someone already reach out to me and say, how did you guys know that PayPal was a takeover target? Because that's the story on PayPal. We didn't know. Actually, Mike Arnold thought, based on their valuation, that since they had such a deep pile of data at PayPal, that even though they weren't making a lot of money anymore, they might be a takeover target. That was in a private conversation, but I want to give them, some credit for that. But what we told people was that if you got to move above 42.35, which is where this dashed blue line is, that you can buy that on a stop. And if it were to close below like it did on Friday, you should exit it for a small loss. And then we'll let you know if the pattern is degraded. It was not degraded. So the same thing applied today. You got in and it went target 1, target 2, and I believe we were just short of target 3 being 44.95. Yeah, the high was 45.65. So we're staying in this one with the intention of getting to that third target. But that's the kind of trades that we put in. They're very specific trades with very specific instructions. Again, this one, the instructions were buy it on a stop in and stay in it if it closes above that level. If it doesn't, exit for a small loss, whether it be today at the close, tomorrow at the open, and then watch the pattern again, because these are very reliable patterns, but we need that close. So we got this one. There was rumors about a takeover bid, and it worked out so far.
Well, I would like to add something to that, which I think is very, very interesting, because people sometimes think technical analysis is some sort of voodoo and say, well, you didn't guess that it would be a takeover target.
No,
that pattern, it's built into that pattern. The pattern and the way a stock trades is reflecting everything the market knows at that brief moment in time. So when we're saying this is a double bottom and now it's time to go higher, the reasons it's going higher are the reasons it's going higher. And the chart is reflecting that. So we don't need to focus that much on the reasons. We just need to interpret the movement. Is that a good way to say it?
That is absolutely correct. What I always say is that technical analysis is the steering wheel.
Yeah.
And then the news is the gas pedal. And you just want to be pointed in the right direction when the news comes out.
No doubt about it. No doubt about it. Okay, so let's talk about news today, okay? Because I was just on Cow Guy Close with Carly Garner, and we were talking about tariffs. And I have a hard time sometimes when the TMZs of financial media and like CNBC, whatever, will say stocks are down 1.5% on tariff mania, on the Trump's new tariffs. Okay, so oftentimes I think they're full of absolute crap. Now today, when I look at the fact that gold's up $150 and the stocks are down 80, S&Ps are down about 80, they probably are signaling a little bit that we thought we had some sort of trade certainty, and now we have trade uncertainty. 2026 was supposed to be a certain year, so that's fair today, right? And how does it resolve?
Yeah, absolutely. It's funny because I was on with Carly as well. I think it was either just before you or just after you, and it was the same subject. And I have a theory about it. And that theory is, with the uncertainty, you sell stocks. Everybody does, right? But I think, almost regardless of how you play it out, full disclosure, before I say this, I didn't buy any stocks today. Okay. But I also didn't sell any. So I think when you play this out, and you could jump in anywhere you think I'm nuts, if the tariffs, well, obviously the tariffs are gone as per IEEPA, right? Bessent already said our tariff revenue next year is not going to be any different. From what I've read, the reason they wanted to go with IEEPA is it was cleaner. It was just a bunch of tariffs all at once. Now they have to do individual tariffs through the other two allowable regulations, whatever you want to
Right.
call them. And it's going to be just a little bit more complex to do. Now, Bessent said, and I believe Bessent more than Trump, revenue is not going to be any different next year. Now, so the second bad part would be that they're going to sue. 1,800 lawsuits are on the books already about these companies suing to get money back that they paid into tariffs. So, number one, let's say they win the cases. What happens to the stocks of those companies? To me, they
Why?
should go
Hold on.
higher.
What do you say? They go higher. Okay,
They
right?
should go
They
higher
should
because they
go
get
higher
an
unless they
influx of
think there's
capital,
retribution
right?
coming, right?
Yeah.
Yeah.
So, I mean, I don't think there would be retribution with the new administration because they would just enjoy the run in the stock market. That's number one. Number two, let's say it permanently, or I should say, for a medium term, hits the stock market. What happens when the new Fed chair comes in? He has a
Right.
reason to cut rates.
Yeah, exactly.
He has a
Yeah.
really strong reason to cut rates. So, like, as I walk this through, it's similar to our gold position, man. Every time I look at the gold position, I'm like, I mean, should I sell all of it? I walk through the scenarios. I'm like, I don't know. I mean, is there anything sounds nuts there to you?
No, there's nothing sounds nuts. I will say about the equity market, everything I can think of fundamentally seems positive, except for where the current price is right now. And the question becomes, can we justify this? And
Right.
you read my the Unfiltered Investor newsletter that I
I
wrote
did.
too, and you also know that going in today, I had 3 times the amount of hedges on that I normally have on,
Yep.
and for it was a sorted reason. It was about some
Yep.
order flow that was going on in SOFR. It was about perhaps maybe Blue Owl being a canary in a coal mine, but something is weird about the market. And it's probably as simple as the fact that we're just pricing in, 7,000 is just this put up or shut up level. And something has to be big to get through that. And so far there's nothing big, but I have been a little bit cautious on the market, despite the fact that I agree with everything you say, is the fact that every fundamental point I look at seems fine to the market, except for market positioning and price. Do you agree with that at least?
I do. And one thing I'd like you to go over, since it's just you and me today,
Sure.
is go over your whole thesis about SOFR in your three
Okay.
cents. We call Jim's contribution in the beginning of the Unfiltered Investor his 3 cents because his ego's way too big to give you his 2 cents. So we make it three
That is
cents.
exactly accurate. I'm surprised that my ego isn't 4 cents, double other people's ego. Okay, here we go. Here's how it played out. So let's go back in the Wayback Machine to December of 2019. And I know
Mhm.
this firsthand because I was brokering the trades, but who was coming to me was somewhat blind. I'm not sure who the deep pockets were they're putting in this trade. Massive, massive upside in SOFR calls. And what this means is that the person who's making this trade and is initiating this trade thinks that short-term debt instruments are going to go way higher, meaning rates are going to go way lower, like significantly lower. Like probably this trade turned out to be 50x is my guess. That's a guess, by the way. But the rest of the story is not a guess. So all of a sudden, it's December of 2019. A couple months pass, and all of a sudden, the shit absolutely hits the fan, and the global economy tanks. Rates go to zero, and this happened. And by the way, the trade was extremely unusual. Had us buzzing. I remember on Christmas Eve, I was brokering a large chunk of it, and people kept coming up to me going, "Do you have any idea where this has come from?" No, it's coming through kind of a blind chain, and I don't want to know because the person who's giving me the orders didn't want me to know, and I'm fine with that. Anyway, now go back to a month ago today. A month ago today, it started again, probably 3 weeks ago, actually, but buying huge, huge upside calls and SOFR options, like suggesting that rates are about to go lower quickly. The only way this kind of thing happens is a black swan type event. So again, go back to 2019. Am I conspiracy theorist? Am I saying that it was a planned event? Not necessarily. I do think it might have been a planned event, but I'm not saying that at all. I'm saying someone maybe was assessing, some smart money was assessing what the ramifications were going to be better than everybody else. Maybe somebody knew that government's going to absolutely freak out and handle that as poorly as it could possibly handled back in 2020. Sounds a little more legit. Or maybe it was a planned event they all knew. I don't care. All I'm saying is the order flow was there. Order flow is there right now, suggesting short-term rates are going to go lower. So what did I do in response to that? I bought a lot more hedges on my stock market because if the kind of disruption that would make short-term rates go back to 1.5 or 2%, it'd stand to reason that the stock market would have a pretty good punch in the nards, worked in punch of the nards. How about that? You like that, right? But anyway, so the stock market gets a punch in the nards. I make money on my hedges. That's the way I hedged it. I personally think that's fascinating in kind of a hair stand up on the back of your neck sort of way, because I don't want to go through any of that, all that bullshit we went back in 2020. I don't care if I make money on it, but I'm certainly going to keep punching and make money on it. Thoughts?
No, I really liked it. And just real quick for other people, tell them what SOFR is for
Oh,
people that don't
SOFR
know
is an
that.
overnight lending rate. What is this actually the SOFR stand for? Replace Eurodollars. So, something, something. The O is
Secured overnight financing rate.
right, exactly. And it's a 3-month contract. But anyway, it's generally the reason it's important, it's a proxy for what the Fed does. Fed funds actual futures contracts never really took off and never had the liquidity. The liquidity was always in Eurodollars and now in SOFR, which it morphed into. So people trade that as a proxy for the Fed, even though there's a slight difference from the Fed funds rate, but it's close enough to make it a good enough hedge for Fed changes in the Fed funds rate. Is that a good enough explanation?
Yeah, perfect.
Yeah,
And I
yeah,
really like it because again, I think this is starting to lead toward a reason for Kevin Warsh to back a rate cut. If not one, maybe two, maybe three. I think there's a reason. Now, I don't believe rate cuts are the end all be all. I think the rest of the economic situation has to be fairly solid as well, just weakening, not
yeah,
collapsing.
right.
Right? I mean, you and I've seen that. The reaction that we learned coming up on the trading floor, especially we were both in interest rate markets for the longest stretch of our careers. You saw it all the time. Rates went lower when there was chaos,
Yeah,
period. It
yeah,
just happened every single time. And guys who had huge portfolios and huge swap desks and all that, they always hedged in the short-term euro dollars and then the Fed funds and then the LIBOR and now in SOFR. So when you see those kinds of things, it's the kind of thing you still see that there's no way you can ignore that. I'll take it one step further. In the second part of the newsletter, Mike Arnold wrote his key thoughts. It's always much shorter than Jim's introductory
because he
writings.
doesn't think he's a genius like I think I'm a genius.
No,
Correct.
he doesn't care about what he knows. He only cares about which direction that the charts are pointing.
Exactly. Right.
But he did say in there that, when defensive stocks are not being defensive, there's stuff to worry about. And again, our newsletter goes out on Sunday morning. So if you're not a subscriber, talk to someone who is, and you could see that they did write this stuff, Jim and Mike. And Mike pointed out that Walmart, a traditionally defensive stock, has a PE of 45. Caterpillar, another traditionally defensive stock, has a PE of 40. This is even after last week's sell-offs. I don't know where it is today. Is that defensive then? I mean, when you've
No,
got stocks like that and they just
no, it's
got these
speculative.
overvalued, it's
Yeah,
speculative at that point.
absolutely it is.
So
Yeah.
I think this is part of the big support for gold. I think this is why people aren't selling gold, because they're either putting on put spreads like you are, or they're just buying more gold because it seems to be the only defensive thing left. Does that make
Yeah.
sense?
Yeah, no, I think it's for 5 years. I keep saying, do I invest here? Do I invest here? Do I invest here? And it keeps coming back to gold. Well, no, every vector keeps pointing to gold. And the only complaint I had with gold, and the only reason I got out of 30% of gold and silver in December into early January as the run up is because the prices were getting just absolutely stupid.
Yeah.
And I didn't feel comfortable participating in that sort of ridiculous price level. So I got out of quite a bit. And I've since bought back more silver, not a ton, but I bought back some calls, paper. I'm not, my physical position never changed.
Yeah.
The
Same here.
paper is the trading element to it. So yeah, the vectors still point to gold in my opinion, even more so than silver. And both of them seem to have a solid breakout of a congestion area today.
Yeah. It's interesting. You look at gold today and it's been in sort of a sideways correction again,
Yeah.
sideways congestion. Today's going to be the third highest close for gold in history.
That's amazing considering it's still about 15% from that
Yeah.
ridiculous high on Thursday, January
Yeah.
29th,
I
right?
mean, we had a higher close on the 28th. Then we had a higher close, but on the way down on the 29th. And then that's it. All the
Yeah.
rest were lower than they are today, up
Yeah.
3.25%. Silver back above 88 right now as we speak, up almost 7%. Bitcoin, 64,000, down 5%. So where does that put you in terms of what Bitcoin is as an asset?
It's a correlated coordinated. It was gonna be great. I was gonna say something
Correlated
that was
to the net.
powerful. You know what I wanted to say, and I just couldn't get it out. Let's start it again, and I'll act authoritative, and I'll use my hands.
So
It
Jim, what
is
do you
way
think Bitcoin
so
is?
it is what it is way too correlated to the Nasdaq, and it still trades with the Nasdaq. And if the Nasdaq is going lower, as it has been since October, the Bitcoin follows it lower. That means that it is not a mature enough product to fill what its destiny is supposed to be. Is that dramatic enough?
Yeah, that's perfect. And
Yeah.
actually, I've never heard you say that part. And I want to stress that it's not a mature enough product to fulfill what it's supposed to be.
Right.
I don't know if you've ever put anything better than that.
Thank you so much. I mean, my whole life on anything?
On anything. I've known you a long time. You're usually pretty messed up in the head,
Right,
but this was
exactly.
really good.
I agree. I ran into a guy who, an older guy, saw at an office building. I was visiting a client, and he goes, "Hey, Jim Euro." He goes, you, the Future's Edge. I never miss it. You with Bobby Iacchino. He goes, I love the way you two bust each other's balls all the time. And I was like, it's not an act. If we were standing next to each other, we'd be busting each other's balls too.
The same thing happened to me a couple of weeks back. I went to a car show down here. It was in Naples. And it was like a Ferrari, Lamborghini. I'm poor in Naples, believe me. But I went down there and I'm walking down the street. Guy comes up, hey, Bobby Iacchino. I turn, he goes, I watch you on your podcast. I go, thanks. He goes, I realized it was you because you're fit and you're dark, but you're short. Thanks, dude. Appreciate it. And you know what the first thing I said was? Jimmy's a quarter of an inch shorter than me.
Which I think is a lie. You completely made that up.
You want me to show you the picture again? I'll put the picture up.
Don't tempt me. I'll put the picture up. Okay, can we talk for a second about Gavin Newsom's comments? I know these aren't market related. We'll get back to markets in a second. Okay. Am I a fool hearing his comments and thinking that is the most condescending bullshit I've ever heard? He's like, he's almost to the crowd of African Americans saying, I'm dumb. I'm dumb just like you guys. What the hell? Am I just being too biased looking at that and saying how ridiculous it is?
You know what it reminded me of?
No.
It reminded me of Joe Biden at the pool talking about corn pop.
Corn pop, and all the kids were hanging on my legs and rubbing the blonde hair on my legs. What a weird thing. Yeah.
Corn pop was a bad dude. So there was a second thing. There was, and I'm looking for it right now and I can't find it. But if anybody watching.
No, he said it was like.
He said, I'm just like you. I got a bad ACT score or something like that.
Well, that's what Gavin Newsom said. Right. Yeah. But Joe Biden, what was the thing that he said? Like, black kids are just as. I can't remember. Yeah, can't remember what it was, but it was so condescending.
He said, poor kids are just as smart as white kids or something like that.
Something like that. Exactly.
So
yeah.
White kids are just, he basically associated poor kids with black people. Black kids.
Yeah, and black people may perhaps not being as smart as other people. These amazing. I don't know. Have you ever read the book? And again, we're going to get back to markets, people. I swear to God. Have you ever read a book, The Autobiography of Malcolm X?
No, I have not.
Please read the autobiography of Malcolm X. He despised Democrats. He despised Republicans.
That part I know about him.
But he despised Democrats quite a bit more. He kept trying to tell his African American. By the way, for the people watching, I am of mixed race. This is not something I'm making a joke about. It is factually true. And I am 20 times more black than Elizabeth Warren is American Indian. So don't start with me, people. Bobby, you know that. I've told you all about it, right? My daughter, against my will, went and did the 23andMe, but we always kind of knew, Southern Italy, whatever. But anyway, the point is that Malcolm X was always like, the Democrats pretend to be your friend, but they're always trying to use you. And it seems to me that is the case again, whatever. So it's
funny
the only
because, no, I totally agree with you. And that's the thing. Like there was the Joe Biden thing and the Gavin Newsom thing. And then over the weekend, if someone watching the show knows what I'm talking about, post it. There was a teacher who was on a hot mic with a bunch of students in a Zoom call. And she basically said they're too dumb to know they're in a bad school. And I'm sort of paraphrasing the quote, and you guys can cancel me if I got the quote that wrong. But the second part she said was, she was quoting an author. And she said, basically, if you convince black people that they're outcasts, they'll go out the back door. You don't have to push them that way. And she was on a hot mic. And then finally somebody jumped in and goes, we can absolutely hear you. And there were a couple of people on there like this because they could hear exactly what she said. And again, it was a school teacher who I'm going to assume, I don't know for a fact, but I'm going to assume leaned left, worst case scenario. Because it was
because 98% of school teachers do.
Yeah.
So that's just quite amazing to me. Let's go back to equities. By the way, so you since the beginning of the year, I've been talking about buy Russell, sell Nasdaqs. I've been talking about Nasdaqs. It sounded stupid. I've been talking about buying crude oil, which I've done both
Yep.
of those trades. You've been talking about defensives all
Yep.
year, and defensive screamed higher until recently. So you had
Yep.
your eye on that ball long before I even thought it was the deal. And can you describe why you think that trade happened? And is it just because, did you already describe it as that it was like money needed to go somewhere? There's still liquidity in the system, but everything else was overvalued?
Yeah, I just think it was the overvalued nature of AI. It was very similar to you getting out of some of your precious metals,
Yeah.
right? It's like, look, this has gone crazy and I don't want to lose the money, but I still want to take advantage of the drag that will take the rest of the market higher. And that's why I thought defensive would go. I also thought consumer staples would be strong, and they weren't.
And
Consumer discretionary still was.
yeah, yeah.
So I was off on which part of the consumer would be spending. I think that maybe is about to change. Look, the three of us, mostly you and Mike, not as much me, but the three of us have been talking about there being risk in the markets. I don't really ever talk about that because I just figure with my trading, I've got my risk in place and whatever happens, happens. But you guys have been spot on about some of this, and we're not breaking through still. If we get some sort of a switch from the tariff conversation where people take my view on it. There's really nothing negative for stocks happening right here with tariffs. And also, by the way, if you look at trade deficit, it hasn't really moved that much.
Yeah. Yeah.
A lot of the countries that were hit really hard with tariffs, if you take Germany as an example, they just started doing subsidies to offset the tariffs in their homeland. So it didn't really matter. It just was money going to the treasuries. This whole thing about like the consumer paid the tariffs, I'm not sure where, man. I'm really not sure where.
Yeah, I don't see it. It doesn't feel like I paid it that much. And again, the people who come out and say, "Oh, we did a study, consumers pay the tariffs," and then you look at who that institution was who was doing the study. It's definitely
Yeah.
one that's trying to take a shot at Trump. So it's very, very difficult. Again, someone he joked on Twitter. There's a 98% of studies came up with exactly the conclusion that the people paying for the studies wanted. You know what I mean? So it's the whole thing is ridiculous, and that even goes for the government organizations as well. It goes especially for the government organizations because we've said on this show all the time the tariff is split up by 5 different entities before it even gets to perhaps changes in discretionary spending, perhaps currency fluctuations that might accompany something like that and kind of offset it too. So I definitely think that the tariffs are incredibly misunderstood, and I think the tariff, like I said at the beginning of the show, I'll say it again, the tariff stress that's happening today, like specifically as we're speaking, is more about uncertainty than it is about, oh, we're all doomed, we're going to hell because of tariffs. Back to my oil. Can you put up an oil chart? Because again, this is my 2026 play. So far, it's working pretty good. It seemed like it broke out of a congestion area. I wanted to go back and test it. I think that's what you would say too, if we take a look
You'll
at the
see
chart.
as soon as I put up the chart that's exactly what I would say.
Yeah, where I want to buy more of it. And remember, by the way, so for those of you who do subscribe to the Unfiltered Investor, Mike Arnold's technicals are unbelievable. Mine are mostly Mike Arnold's technicals, but there are some things that I look at a little differently. Like to me, when I saw the trade above the red bar from the high from about 6 bars ago, lower than that, right in
Yeah.
there. Okay. So to me, that looks like an explosive move higher waiting to happen. But Mike
Yeah.
Arnold's technicals don't always say the same thing. He would say when it came out of the rotation zone. So he would have bought it earlier than me, right?
Well, no, he would actually bought it a little bit later. So when you look at what's happening here, I told you that I wouldn't be long crude, and it went higher.
Right.
Okay, I didn't say to be short crude, just
Oh, no, not at all.
my
Right. Yeah.
defense. But I said this: the reason this trend line is here is I said when we get a close above this trend line, okay, I would then be long, and I drew this after these two candles, just so you know,
Right.
because it's a best fit trend line to me. It's not a pure trend line, which would have been right here. It's more a best fit trend line to sort of get a general idea of the trend. And we got that here. So this is the new long to me because the rotation zone is here. It's the 8 EMA and the 21 EMA on the daily, and they are starting to angle up. And that's what I want to see, as they're starting to widen and angle up. So now they become supportive. And if you look, if it were to pull back, you'd also be pulling back to this little V-shaped reversal here, right? Which would be right. You could say it's between 64.81 and about 65.50.
And for my longs, I want it to pull back to there, right? And then show some strength
Yeah.
and support.
Yeah. I mean, if it runs away, great. You're already long.
Yeah, I'm already long, right?
But the strength would be a pullback and it holds, because that tells you that it's not a speculative thing. It's the markets have decided that's a value area where it needs to buy. I'm not talking about a point and figure or a Stottlemyre value area. I'm talking about just a value area where, okay, we've dropped down to this price. It's a bargain here versus where the rest of the curve is.
Okay, so tell me, because again, it's so funny when you guys who are watching this, you know that Bobby and I do tons of media, and oftentimes we will talk about our fundamental thesis, despite the fact that we fully admit that we're mostly technical traders and technical investors.
Yep.
What would be my fundamental reason that I'm going to go on TV as if it was mine probably tomorrow and to talk about crude? And what's the fundamental bullish case?
Well, I would say it's obviously geopolitical, right? Because that was
Iran.
that was the spark for the last 4 days of upward movement, was the Iran situation.
Right.
But when you're looking at it now, if you were to have a fundamental story behind it, to me, it's where GDP may come in. Like, I think that I'm looking at Atlanta Fed GDP right now, and when I pull it up, let's see where it is right now. Reserve Bank of Atlanta, 3.1%.
A little lower, I think.
It's at 3.1.
Okay, solid.
That's strong growth.
Strong growth.
If you have strong growth coming out of winter and going into summer, you have strong growth and a seasonal tailwind. And according to our friend Tracy, she was just in Saudi Arabia. She said she has recently learned Saudi Arabia does not have the excess capacity that people think they do. And our production is starting to tail off, U.S. production.
Right. Because wells are becoming gaseous. I remember the conversation. And we told her that since we've been on carnivore, we personally, you and I are very rarely gaseous. Yeah. And she did not seem to want to talk about our internal.
No, she's very, very nice. She's not like us.
Right. But anyway, I did want to talk about them conversally. So
basically that's your thesis, is that
right, supply disruptions
than people think.
Yeah, stronger domestic economy, and I know that the world economy is crude as much, but nothing is as important as the U.S. economy still. Yeah. So that is interesting, because I definitely think when I look at that, I think 72. So
let me ask you, based off the move today, do you cover some of your hedges or you just leave them alone?
No, I'm leaving them alone. Oh, you mean in stocks?
Stocks, yeah.
It's so funny because I just looked at my watch a second ago and I was like, because I do want to cover a little bit of my hedges. And I'm like, shoot, we're going to be talking till butt up right against the market closes, because they're not in futures. They're in SPY and QQQ. So I will not be covering them anything today, but I should be covering them today. But because of you people, and I want to talk to you people, it is stopping me from doing it. If Bobby wants to talk for the next 5 minutes, I'd sell out a few put spreads. But can I talk about, because what I thought the position I put on, I thought was pretty ingenious. I told you about the unbalanced put fly. Is that interesting for people, or is that? Yeah. By the way, speaking of interesting people, Remo, thank you, Remo, sent me a statement where remember the boomer portfolio, or the old flux portfolio. Sorry about the language that I came up with. He instituted. He just started with, I think, 10 or 20 grand or something to manage it that way. But it's a pretty working strategy right now. And I don't even think he used the dynamic put hedging part of it, I don't think, which I think is one of the more important parts, but I think it survives pretty well on its own, even without that, which I think is quite interesting. But it's doing very, very well.
Tell people about the options trade, and then we can go into the boomer portfolio.
Sure. Okay, boomer portfolio too, because again, there's going to be a time where I'm going to say, okay, let's invest our boomer money in this, and I think there'll be a line out the door. The options trade I just did is I sold the 685 puts in the SPY to buy 2 of the 670 puts, and then sell 1 of the 500 puts, and I went like 6 months out into the future for this trade. So the thesis is that I'm not going to keep this to 6 months, because the big risk would be that if it went right down to 670 and settled there, you'd lose all the money from selling the 685 without making any money on the 670, and still lose all the money but make the money on the 5,000 you sold, which wasn't that much money to begin with, because it's so far away. So the thesis is that I keep this trade on for about 3 months while there's still a ton of juice in those 670 puts that I own. They haven't decayed. If it goes higher, everything will evaporate. I'll lose everything, but it's a hedge. If the market starts to go lower, usually volatility starts to scream higher. So those 670 puts will scream much, much higher. And then if it gets down to 500, that's when I want to buy the S&P anyway. You know what I mean? And again, it's hard to buy on a pullback of that magnitude, but it's where you're 100% supposed to buy. And I love having an option strategy on that's almost going to force me to buy it at that level. Thoughts?
Yeah. Yeah. I
Yeah.
love that conversation. By the way, unfilteredinvestor.com, down the road, I can't say when because it's a bit of a secret. There will be options trades in
Yes.
there. It won't
And
do them every
again,
week. Just when something looks, appealing to Jim and to Mike and to
I
myself.
love that. And again, and for the boomer portfolio, should I describe the boomer portfolio or no?
Yeah.
So again, and by the way, so the reason I'm perfectly fine with giving it away to everyone. And I will admit that it was inspired by Jared Dillion's portfolio, but I think there's a slightly better way. Although Jared Dillion's awesome portfolio is pretty interesting. So this portfolio that I've been managing my money as is basically any new money. I still have a lot of other ways that I manage in different accounts, and it gets so confusing that I barely know which way is up sometimes. But the new money I'm investing like this way of 100%. 15% of it goes into an index fund like an SPY. 15% of it goes into an index fund like the QQQ, growth. 10% of it goes into a call hedge strategy, like TSPY is an example, where they sell calls every day on it, a little bit above the market. So you can make a little bit of upside. But with all the thesis there is with all the buying of the 0 days to expiration calls, I believe there's probably a little more juice than normal in there. So that's 40% of the portfolio is those things. Now, of that, the 30% that's just naked has a dynamic put strategy, which at the first of every month, I buy 3-month out puts to sell 2-month out puts to get a little theta, to get a little extra decay in the 2-month out. But I want to spend whatever looks the best, but spend approximately 1%. Have on at any one time have 1% of the value of the stocks I'm trying to hedge hedged with the puts. And again, so that probably means just on the stock part of it, I'll spend about 2% per year because again, I'm rolling it. It's whatever. So 2% of the stock's gains. And then the next 60% of the portfolio is split up as follows: 15% in a inflation hedge dollar risk portfolio, which is mostly gold, some silver, and a tiny bit of cryptocurrencies. Other 15% is real estate with like IYR or whatever, an assortment of different ETFs to do your real estate. One is a long bond spectrum like AGG, and the last 15% bucket is 2-3-month bills like SGov is an ETF that pays you like whatever the 2 or 3 month rate is at the time, like 3 or 4%. Now the back testing on that portfolio it's been pretty spectacular. Again, it's hard to back test the option part of it. So that's the part that time will tell. But if anything, the option part of it is going to definitely decrease drawdowns. The question is how much of the upside performance is going to be taken away from it. I think it's going to be negligible. And here, my expectations for it is about 8.5% return, max 12% drawdown in a 2008 type year because of the different hedges and strategy.
And I did some back testing on it without the options as sort of a, whenever there's a science experiment, they need to be able to replicate it somewhere else.
Yeah.
So I did some back testing of this on my own, and it came out right around there,
Yeah.
about 9 to 12% a year. A little bit lower drawdown. It was about a 10.8% drawdown. So that was without the options.
Better still, right? Without the
Yeah.
option.
Yeah.
So the
So
option
it
probably
seems to
reduces
be exactly what you want it to be.
So again, anybody, if I'd start the friends and family. What are the rules for friends and family again? You can have like 15 investors in it
Yeah,
or
they've
something.
changed a lot. They've
Yeah.
changed a lot. So
And
I'm
if
not
someone
sure.
watches this and says like, yeah, we want to do this right away, I guess it would be like $1 million, just because I don't want commitments for like, $1.5 million total. I'm not going to do it for that. But if I get commitments for 20, I would do this for you. And if everybody agreed that that's the way they want it to be managed, and I'd take 0.5%. Again, I don't need to be rich anymore, and I want to build that to a billion. Well, billion probably defeats the purpose of it, of getting in and out smoothly. So
Yeah.
I bet you cap that at 500 million is what we would do when Bobby and I
Just so
manage.
everybody knows, I'm trying to convince Jimmy to not manage money ever, because I've done that. And it is basically, what have you done for me lately? And unless you get $500 million, it just doesn't pay. But again, if your goal is not to get rich on it. You just want to keep busy, and it's just something
Yeah, I
nice
want
to
to keep
do.
busy, and I'm
No
old.
problem.
And yeah, the next 20 years, I want to do something fun like this. And again, the only rebalancing what happens. Oh, we rebalance every year, by the way. But
Yeah.
we rebalance the option part of it the first of every month or the last of every month. I haven't decided that part yet to stretch that part of it out. So again, I think this again, if anyone wants to take the ball in this, I'm an idea guy. I'm a broad strokes guy. I can manage it, but I'm not going to go and start recruiting money. I'm going to hire somebody for that.
All right, I'm confused. There's a couple of what are you guys talking about? Oh, why are you guys talking about this? Talking about what?
Talking about
I was
what?
looking at some things in here. It was on 341. What were we talking about?
Baby Gavin Newsom?
Maybe. I don't know. The question was, why are you guys talking about this? Carter Evans, 99. We talk about whatever we like to talk about. So you're happy to, we'll welcome you to call us idiots. We don't really care.
Yeah, well, which by the way, Carter Evans, we're talking about it because you didn't give us a better topic to talk about. This is your fault, Carter Evans.
And this I didn't see. Widge is saying, did AG Bondi ring the bell down 50,000? How weird was that? I didn't see that.
What? Tell me again. AG Bondi ring the bell down 50,000?
Did she?
No, I don't know what that. Hold it.
Know,
Oh, did she ring the bell on the top when she
Yeah.
said Dow 50,000? She did say it. She said the Dow's at 50,000. So yeah, to your point, Widge, that we've noticed things like that in the past when people get
Widge
a little
was
too
doing
exuberant.
market colloquialisms.
Yeah, so market colloquialism. They rang the bell.
Yeah.
So that's interesting. Interesting. Yeah. What other topic in the last 5 minutes? We'll talk about the
USA
hockey team.
hockey.
Yeah, USA hockey. So I actually thought it was a big moment. I thought when they brought out the guy who died from a drunken driving, killed him, they brought out his kids. Yeah. You know, and what I loved on social media was how people talked about this is what masculinity looks like, which you and I have been saying that for the moment they started saying something called toxic masculinity. Masculinity cannot be toxic. It's impossible. It's definitionally impossible. Masculinity is about using your strength to take care of people, to take care of your tribe, to take care of the herd. And those badass hockey players, or the one kid, Jack Hughes, is that his name? When they're interviewing him, he's got bloody teeth, and he goes, "I love America, and I love that we have good dentists." Did you hear that?
It was so awesome. I mean, it's the only thing I watched. I don't watch the Olympics anymore. I do watch the Summer Olympics. I like to watch track and field, but I avoid the Olympics for a lot of what we heard in these winter games.
Yeah.
You know, people going, you know, I don't believe on what's going on. Just say I'm representing my country. If you don't like what's going on, just say I'm here for the people who love the Olympics and the people who love their country. Don't say anything else.
Simple enough, right?
I mean, Jesus, I don't want to do that. For Christ, is that the same thing? Criminy.
Criminy, right?
Stop with the politics in our sports. I don't think the NFL has stopped hate by telling us to choose love.
Wait, well, they didn't. I thought when they told me to stop hate, I stopped hate. They put it on the back of the helmet.
Hate when they told me to choose love. I just chose hate.
I got confused because I thought it said choose hate. And so I get that.
Choose love.
And end racism. I did that. I ended racism within myself.
Well, I did listen to them with that. I was very racist, and then I saw their helmets, and I said, "I'm not going to be this way.
No more racism."
It's just ridiculous. You know, I get. Look, if they want to say, "I want to use my platform," that's fine. Raise money to have a basketball game with street gangs and cops.
Oh yeah,
do that.
That works. Yeah,
do that.
Yeah,
use your platform for that.
That actually makes sense. Okay.
Anyway,
do you want to wrap it?
Yeah, we'll wrap it. We're rambling now.
Jeff, are you kidding me? Jeff Carter just pops on the screen now.
There he is.
I aim to serve. I aim to serve.
Let's do 15 more minutes with Jeff Carter. Is that cool, Bobby?
Jeff.
And then we can make this, we can make it a whole different segment too. So this is important, guys. Don't hang up yet because Jeff is running for treasurer. But let's start the whole thing again. Welcome to the Future's Edge. I'm Jim Muriel. That's Bob Iacino. Thank you to our sponsors, Independence Arc Farm. Buy from Marco. Thank you to our sponsors, American Gold Exchange. Buy gold from Daniel Samuelson and unfilteredinvestor.com. Jeff Carter, who's an old friend of ours from the trading floor, but that's not why he's on the show. He is running for running for treasurer of the state of Nevada. Why is that a big, huge deal? Because Nevada's freaking purple, okay? If Nevada can fall one way, that's a great, great thing. And Jeff is the presumptive leader. I don't care what the polls say. Jeff is the presumptive leader. Jeff, can you tell us why you made this choice to run for treasurer?
That's a great question. And people actually ask me that on the trail. I was just having lunch with a lobbyist, and he said, "Why would you do this? Did you fall and hit your head?" And basically, it's because I don't want Nevada to turn into Illinois or California. When you look at, we're old enough, guys, that you can remember the old Chicago machine, right?
Yeah.
And I was on CME PAC, and you could cut deals with Rostenkowski, and Rosty was a great guy, right? I mean, and but the rise of the far left is really something different, and I noticed it in Chicago when I lived there. So I moved out here in 2020, and 5 of the top Obama fundraisers went to my kid's school at Francis Parker. So I kind of knew that whole thing. And I didn't, I'm a Republican, but I didn't like what I saw there. And um, so this opportunity availed itself to me, and it's the right time in my life to do it. And it happens to be the position that fits me. So, we run a $12 billion portfolio here, basically in short-term interest rates. I traded Eurodollars for 25 years. I mean,
Yeah.
so like, so there's other stuff that go along with it. And then what we've seen in Nevada with the current treasurer is he's missed a ton of opportunities the last 8 years to decrease debt when you could easily do it with no cost to the taxpayer. We've seen leftward tilt in the office where he did DEI, ESG investing. He just put out a thing. He gave Trump a bill for his tariffs, and and he's a nice guy but a leftist, and it's kind of like Obama was a nice guy but a communist, and so you can't have that. This should be the most apolitical office in government. It should be just about return on assets, getting assets back in the hands of the individuals that own them, that sit on our balance sheet, running the 529 program, which is another thing we can talk about. I got screwed over by Janulius in Illinois with that too. So there's a lot of reasons to run, and so I'm doing it. It's you and I, like, we'll talk about politics on Twitter or whatever, or we'll watch TV and we'll throw stuff at the screen. The crazy stuff is when you and I get into this, we don't know anything. Like, I'm learning so much. I have a great campaign manager. His name is Chris Carr. If you look up Chris Carr, Nevada, and you grok him or ChatGPT, you can see what he's done. He doesn't do down ballot races. And he and I went to this bar, and we were going to have a few drinks. We had 2 glasses of wine in 2 hours. And if anybody knows me, that's almost impossible. And we talked the whole time. And he goes, "I don't do down ballot races, but I'll do yours." And I said, "I won't run unless you do mine." And so he's put together a great team for me, and we're off and running. So I can answer any questions that you want. And I really do think that if I win, more people like us might take the plunge and do this. And we need more people like us to do this.
I almost did, and I'll talk to you about it off air because the election's still going on that I was almost part of, and it's kind of messy. But you said something that's interesting, and for this audience, I think they would understand it better than most.
Right.
You said left money on the table. The former treasurer, were you talking about specifically like not terming out debt when they had the opportunity to, not even understanding how to work money to your benefit? Is that correct?
There you go. And the problem with state treasurers, if you look at all 50 of them, and I did this before I ran. So they approached me in July, and it took me till December to decide. And I went and I talked to 5 different state treasurers. So for instance, the state treasurer that runs North Carolina now used to run Michael Bloomberg's family office. Guy's an amazing dude. And he found $170 million in their budget that had just been left there and carried over for years that nobody knew anything about. And he retired I think 55 million in debt. And then he went in and he looked at his bond portfolio and he said, "Hey, we've got a bunch of stuff trading below par. We can just make a market for that, just like we used to on the floor, right?"
Yeah.
And then you re-auction off the debt at par, but you auction off far less, and you decrease the amount of debt you have at no cost to the taxpayer. And so he did that, and he decreased their debt by like $30 million. Now their portfolio is a lot bigger than Nevada's. Nevada's is a $12 billion portfolio, but shouldn't the people that are in the Treasury's office, shouldn't they have some finance background? Shouldn't they be an accredited investor at least?
I can't believe we have to ask that question.
But it's a
Yes.
stepping stone. It's a
Yeah.
stepping stone. So, like, I don't want to knock the people that are running against me, but none of them have any financial experience at all. None, zero. And so, well, the first bill that I'll introduce is, hey, let's have something. Be an accredited investor. You don't have to be a CPA to be a treasurer, but a financier, something. And so, that's very important, I think, in this day and age, especially when you look at the tax bite that taxpayers are getting, federal, state, local, boom, you know?
So Jeff, I'm going to go on record, and you guys already know this. You're a better man than me. I'll tell you why. I just got approached to run for treasurer of our HOA down here in Southwest Florida, and I said no. I flat out said no.
But
And
you'd have been great at it though, Bobby.
I actually, the election's still going on. They're telling me right now, it's like, no, we need your finance experience. I'm like, I would just do short-term treasuries with the, I mean, I wouldn't do anything
Yeah.
crazy. And I
Right.
said, the only thing I would do, the only thing I would change about our situation here is it would be transparent as hell. I mean, I would have a
Yes.
website or something. You could see where every dollar's going and where it ends up.
Right.
And it just seems
Yes.
simple to me. But what do you
Yes.
think the core problem is? Do you think something like the treasurer's job, for example, has just been kind of a thing where it's like, look, I'm going to win the governor's race here, run for treasurer, I'll back you. You're a buddy of mine. We play golf
Yep.
together. You know,
Yep.
we got hookers in Vegas. You're my treasurer
Yep.
now, right? I mean, is
Yeah.
that how it's been going?
I think it depends. There was a guy here who I talked to. He was the very first guy I talked to. His name was Brian Krolicki, and he was a two-term treasurer. He came from an investment banking background. He knew what he was doing. Like he stepped in the job and he knew what he was doing. And too many people don't know what they're doing, so they rely on the staffers to just coast. And I think that's nationwide. And then you look at the fraud that happened in, let's say, Minnesota. Imagine if you would have had a Republican treasurer instead of a Democratic treasurer. Maybe that doesn't happen, right? Will Doge the Treasury here for sure? I don't know that there's a lot of fraud here. I don't. But if there is, we're going to uncover it.
Yeah.
One thing my friend said, because you guys have been in the business as long as me, right? So 40-year
Yeah.
history of finance, right? So you have networks, right? You know guys trading all kinds of stuff, all kinds of different places. And I have a guy that's traded muni bonds for the last 40 years. And he said to me, I looked at the Nevada portfolio. They don't have any variable interest rate bonds in their portfolio. And the only thing I can tell you is that's not good or bad. It's just their software isn't updated, so they can't buy them. So why isn't the software updated, right? Like,
because it's government, and government can't get out of its own way.
Right? I mean,
Yeah.
and it's like, come on, this is table stakes. This is just being so like my goal when I talk to people, I talk to the Nevada Chamber or the Las Vegas Chamber, and I'm like, look, I'm not going to make any radical changes. I'm just going to professionalize and modernize this and raise the bar, because we've had 8 years of nothing. And, the treasurer I saw, I'm going to tell you one thing you'll laugh at, and one thing that's true. This treasurer that we have now said, well, he's gotten great returns. Well, it's short-term interest rate portfolio. What's happened since 2021? Fed's raised rates how many times? I mean, a monkey could have got great returns, right?
Exactly. Right. It was a pretty simple trade.
Yeah. And then Biden threw tons of money at states in 2021. And so everybody was flush. So your rainy day fund's going to be good, because that's the legislature and the governor anyway. But this other guy in the Republican primary I'm running against tried to negative campaign against me. And he said, Jeff Carter's lost millions of dollars on the trading floor of the Chicago Mercantile
and
Exchange.
gained. Yeah.
Of course I did.
Yes.
You obviously don't understand finance.
This is like,
don't
this is
understand
sort of
it.
what I mean, right? When you look at this from Jimmy, this is why I hope you choose not to manage money down in your semi-retirement, because it literally happens like that all the time. Every investor is like, well, the stock market's up to X. Yeah, but when it was down 20, I was only down 6. Right. But that's not what it's doing right this second. Jeff, how much do you think you have in terms of leeway to fix some of these things and get credit for it? I don't mean credit like you personally need credit, but to people to actually say, wow, Mr. Carter, Treasurer Carter actually helped us a lot.
It's a good question that I don't know the answer to. There are things that the treasurer's office can do without the permission of the legislature, and scrutiny and all that stuff. And then there's things you can't do. So, like for instance, if you think like I do out into the future, and you say the world's going to have AI, it's going to have robots, we're going to have AI agents doing things for us, right? And robots are going to do things for us. Well, how are they going to get paid? Are they going to use a credit card? No, it's going to be cryptocurrency, right? It's going to be USDT, USDC. It's now audited by the SEC. Well, if I wanted to do that in Nevada, I couldn't do it as a treasurer. I have to get buy-in from the legislature, which I think is actually appropriate. And there's some things that, you don't want to be autocratic. It's 3 parts of government. So, but then there's other things like, hey, upgrading the software, that shouldn't be, I mean, maybe that's a heavy lift, but or installing an AI agent to match up property that's on the books that should be in Citizens, because that happens. People die without wills. You get all these safety deposit boxes, and people don't know that they have property on the balance sheet of the state, and you got to get it back to them. And it's important to do that. My 529 story is this. So in 2000 they started, and I dumped as much money as I could in them for my kids. My kids were born in 91 and 93. I started saving for college right away, transferred it over to the 529 plan, invest really aggressively. It's 2007. I go, oh, I want all the money out and put into government bonds because I need the money in 09. Right? 08 happens. Alexi Janulius, the treasurer of Illinois, put a real estate wrapper around my government securities, and I lost 38% in 2008. And you're like, how the fuck did I lose 38? You know what I mean? Like, how did you do this? It's just because he's an idiot. And so he didn't catch it.
Right.
And Oppenheimer.
Can I add something real quick? Can I add something real quick about Alexi Janulius? Alexi Janulius and Arnie Duncan have their positions because they chose the right lunchtime basketball game to play at. I'm not joking, by the way. I'm not joking.
Bank Club, that's right.
At the East Bank Club, where I chose the one that was in the loop, because I was thinking, would I be a treasurer because again, for people who are listening, what's he talking about? Yeah, Barack Obama chose the same lunchtime basketball club, and Alexi Janulius is a great player, as was Arnie Duncan, and both of them became Obama's pals, and they got vaulted into politics because of that relationship, not because of any intelligence they have. Surprise, surprise! You guys probably know that by hearing the words that they say, which are usually dumb. Anyway, go on, Jeff.
No, that's absolutely true. And so, I just think, when I got into this, it was like, okay, I got this Chris Carr guy who's amazing. So he's kind of my shepherd, and I'm the box of cereal that they tell where to go now, right? And so I just follow their advice. But the negative campaigning, we were on the floor. It doesn't bother me. It bothers people around me. But it doesn't bother me. And frankly, going to the floor every day was like being in a knife fight anyway. So, I mean,
we're ready for this shit. Bobby, do you have one last question?
Yeah, I mean, sure.
Yeah. Bobby, got one more?
Yeah, I mean.
Yeah. No, I want Jeff to finish his point, please.
Oh, sorry about that. I thought you were, Jeff.
I was just going to say that's part of it, I guess, that is really distasteful. If you want to find out about me, just go to jeffcarternv.com. If you want to chuck some money in, that's great. My race will cost $1 million, which is shocking. It's 2.5 million voters in Nevada, but it's $1 million race. And part of it is due to all the fraud in the country that gets recycled back into races. It drives up the cost for everybody. And so that was like, when I said that, I was like, wait, $1 million? Why not like 300,000?
Yeah,
or something like that. And it's just, the money's ridiculous. This one consultant that I spoke with, great kid, he moved out here from Ohio. His name's Devin Bilski. And he said, Jeff, he said, politics is not politics the way you're thinking about it. And I said, what do you mean? And he said, this is a multi-billion-dollar yearly business. And when you look at all the money that goes into it every year, it is. Yeah. And it's just getting bigger and bigger. And I know Jimmy and I have talked about this online. We're sort of in a cold civil war right now that we never want to see get hot. But the socialism is here. and we got to stamp it out. And it's people like us that participated in capitalism our whole lives and understand capitalism that have to do it, I think. Because there's a lot of people that talk a real good game, but then when the iron comes out, they run away.
So you think it can still be done from the inside? Because that's something, by the way, that's less than $1 a person to run that. So I think I pretty would be a pretty
Yeah.
good treasurer. You have to, you still believe, 40 cents to be exact. You still believe it
Yeah.
is possible to do it from the inside.
I think so, because I think the case we can make is so compelling compared to the other side. And then theirs sounds good on paper and on a blackboard, but ours works. And so when you see the mayor of New York set up a grocery store and everybody's fighting in line, well, we saw that in the 70s in Russia. You couldn't get toilet paper, you know? I mean, so I think like we have to talk about opportunity and failure and be very honest about it. I mean, how many times did I fail? Just gazillions, you know, gazillions. But you know, without failure, you're not taking any risk, and without risk, you don't move society forward. If you don't move society forward, then you know what do we got?
Well, I just want to say I am grateful. I don't live in Nevada, but I'm grateful that you're doing this because
You can still
I think
move here.
that the first step is to get people. I chose Florida. It was going to be one of them. I just
know.
think, you know, to get people to understand these things, you got a hard slog, buddy.
It's hard, and I think though we've got the winning issue when people see it, experience it, feel it. Even if they try and fail, if they can get back up and try again, I think that's very important. Um, Another thing to think about that we've seen, just as an aside, that I've already started talking to CFOs around the country about is A16Z is a venture capital firm that did this huge blog post about why they left Delaware for Nevada. And it's the capricious judges in Delaware. And Nevada turns out to be the best place to incorporate. So if you're going to incorporate, you should incorporate here. We're building a business court, and I don't know why Delaware did what they did, but it wasn't just Elon. There were plenty of companies that they ruled incorrectly on, and Nevada has shareholder safeguards and management safeguards and board safeguards that other states don't have. And so it's a good place to incorporate. It's maybe not the greatest place where you want to domicile, but I mean, it's a great place. I'm up in Reno today. It's beautiful here, but it is the best place legally to incorporate your company.
So Bobby asked a question, and I thought what your answer was going to be was slightly different, but I want to see if my answer would have been something that came to your mind too. He said, "Do you think it can be fixed from the inside?" And I think the answer to that is, what other choice do we have? Even if it's just a puncher's choice, you know what I mean, right? Exactly. None of us are advocating when we say stamp out socialism. We're not talking about figuratively stamping out.
Right.
It is a metaphor. We want to beat it in a fair and square way, right?
Yeah. You betcha. Yeah, and I think that's absolutely right. And I think, Trump has one style, right? And some people, it's a love it or hate it style. He's a New Yorker. We dealt with New Yorkers all the time, right? I mean, so you're sort of used to it. I think you can be smart about talking about the issues, and rational people will get it. So there's going to be the 20% that never are, and they're probably the true believers in communism anyway.
Yeah.
So you're never going to change their mind, and they're just going to have to age out. But as long as
my buddy
get
Tim
the next
down
generation.
here lives in Florida. He's a fan of this show. Told me not to run for treasurer of the HOA. So just saying.
Yeah, well, HOAs are thorny. Yeah, they're very thorny.
It seems like a bunch of Karens pointing a finger at you, telling you,
"Oh my God,
you broke this rule."
Jeff, you're the best, man.
Jeff, we're wrapping it now, if that's okay with both of you guys. Oh, one last thing, Jeff. If people want to contribute to your campaign, we're all about pragmatism here. How do they do it?
Sure. They go to jeffcarternv.com. Click the link. You can donate in cash or crypto, and we will put it to good use. We are donating money from a lot of people, all kinds of sizes. And if you think that $100 doesn't matter, it really does. It really does. And so We've had
Shit, I was
$10,000
about to give
donations.
5, but if $100 matters, I'll just give 100.
No, five's good too.
No, I meant 500, right? Yeah, right.
Yeah, right. 20 ticks. It's just
Yeah,
20 ticks. for
20
you.
ticks. I can make that tomorrow.
That's amazing.
Yeah, all right. Thank you guys so much for watching
guys
this.
so for having me
Thank
on.
you for
I
being here,
appreciate
Jeff.
it.
It's good to see
Yep.
you. I haven't seen you in a couple of years. It's always, I mean, we talk, but I haven't
Not,
seen you.
not
I'm
since
glad.
I've been at Brandt's for a burger. So,
Yeah, why don't you
yeah.
come back? I need to make money at Brandt's.
I like it. It's best burger around.
I
Jeff, real
appreciate
quick,
that,
when the
man.
show ends, don't hang up, okay?
Okay, I won't.
Anyway, thank you guys so much for joining us. I love the live element of this too, but we're going to repost this a bunch of times. I want to get Jeff's word out. Thank you to our sponsors, Independence Arc. Thank you to our sponsor, American Gold Exchange, and to our favorite sponsor, unfilteredinvestor.com. Thank you guys so much for being part of the Future's Edge.